Hello traders and welcome to another video review. Today is Monday, July 11th, 2022. Let's start with the Forex calendar to see what is going on at the beginning of the trading week. Some data from the New Zealand have been published overnight, and as you can see, the most important data was the CPI for the second quarter. That was better than expectations of 1.5% with actual reading of 1.7%. However, this is still lower than the previous reading of 1.8%. So we have a situation when the CPI, Consumer Price Index, is a little bit lower than the last reading, 0.1% actually, but it beats the forecast of 1.5%. So maybe the price index pressure, the inflationary pressure, is getting lower in New Zealand, somewhere there. The London session doesn't have any interesting events here to talk about. However, the New York session is kind of interesting. However, there isn't much of the events as well. Housing starts from Canada scheduled for release 2:15. As you can see, market expects the drop from 287,000 to 266,000. Then we have some speeches basically from Bank of England FEC member Sanders at 3 o'clock, and 6:30 there is a German Buba official. Boltz will give a speech as well. So this is the Monday on the financial markets. The most important data are here. However, we should start with the technical part of New Zealand dollar, of course, and then we will see what is going on the major pairs. Daily time frame chart of the New Zealand dollar looks very interesting. We got the short-term trend line here that was respected for the last 2 weeks. As you can see, we hit the level of 6,119. The New Zealand dollar made a new local high at 6,195. This is the highest from today, so we should expect this candle to close somewhere, maybe above 6,190, maybe below. We will see. That's my point. However, regardless of the fact where this candle will close, we are still trading below the short-term trend line colored blue and short-term trend line colored orange. The local low made at the level of 6,056 pips. So I will just move my indicator and move my line here. Now this is a kind of a hammer, kind of a pinball candle, so it means that there is some sort of the demand around the 6,000 pips area that might push this prices a little bit higher. However, the momentum is still negative. The momentum is still around the level of 40, 41, and the low of this candle was 35, 33. So it doesn't mean that much, because we are still trending, as I said, we are still trading below the short-term trend lines, both of them, blue and the orange. So we need to break somewhere. Otherwise, this will be just, let's say, a regular bounce. If we put our price range tool, then we can see that there is the last bounce was 3.23%, and this one is so far 2.40. Okay, so we need to bounce at least somewhere around the orange line, somewhere here, around the level of 6,250, in order to have the same kind of bounce than it was seen last time, and if we break above this level 6,250, then we have an overbalance. Okay, then we might start the overbalance, we might start the move to the upside, we might start some sort of the bigger let's say bounce to the upside. As you can see, there is one more correction to the upside, which is way bigger than this one, of course, but for the beginning of the nice bounce, we can start with the level of 6,252. So that's the outlook for the New Zealand. The downtrend is being continued. All of the bounces are being treated as local bounces, local corrections, local pullbacks, and they are definitely not any kind of indication of the downtrend, termination or reverse, right? So that's the New Zealand dollar to the American dollar. Euro dollar, most popular pair, is making something very, very interesting. So let me just zoom in, and you can now see that US dollar made this very, very interesting pattern here. If you take a look around the parity, we got the push to the downside. This candle has a big upper wick, and of course push to the upside. We have a red candle that has a long down wick. The low was made at the level of 9,953. Then we have an engulfing, bullish engulfing, and another move to the upside. So from the extremely oversold market conditions, the market is continuing to move away from these conditions. This is what I mean. And we are still trading inside of the channel. However, this channel is very weak and might be broken very easily. So the market is trying to get away from the parity level towards 1.0362. So this is the next target for the bulls. Nevertheless, there are other technical resistances here on this chart, 1.0490 and 1.0626, that must be violated for this bounce to be continued higher. And the next important technical resistance, let me just zoom out a little bit so you can see it clearly, is the level of 1.0788. So this is the level that will change the outlook. Okay, and that's why it's on blue. So for now, okay, maybe we will have a 2-day, maybe we have today a kind of increasing, green candle. Maybe it will be some sort of the bounce. However, it's still small. It is small bounce, small pullback towards the upper channel line. It doesn't mean anything, and we can reverse anytime now, basically. However, 0.0362 is in view after the breakout above the upper channel line. So that's the British pound. Let's take a look how is the US dollar versus the Japanese yen. Let me just zoom out first to see the perspective. There you go. We are trending higher. There is no change with the outlook. We are trending higher. Right now, the last high was made at 139.40. This is where the last high was made. Our technical support for this pair is still located at 131.50. This is the key technical support. The nearest technical support is 137.08, and the next target for bulls is at 140. Despite the fact that we have a multi-month bearish divergence between the market and the price, the uptrend is being continued. And please notice the fact that this momentum is still inside the positive territory and still around the level of 70, which means this is still a strong momentum. Okay, so we might stay in these conditions for quite some time before the big, some kind of a big correction will come. The nearest important correction, as far as I can see, is around 4%, not even 4%. So we might wait for a little bit for the market to make something here in bigger than a 4%. All right, and the Bitcoin is again trying to do something interesting here. However, we will see how this will end up. We broke above the 61% of the Fibonacci retracement of the last wave down. Okay, we got nice big up candle here. This is a daily time frame chart, so please notice the fact that this candle has not been completed yet. That was the failed breakout to the downside. We got the engulfing here and this kind of a interesting pin bar here, and now we are it looks like a market wants to go towards this high from the 8th of the July. This high is at 22,494. However, there's still a couple of other technical resistances, and the most important one is 23,290. This is where my arrow is. Okay, so this is the key technical resistance, and please notice the fact that we are still trending below the short-term trend line. Okay, and we are still trending inside the corrective channel. So nice bounce of a euro. However, it doesn't change much yet in the overall situation. The overall trend is still down, right? And we need to break up above the trend line, above 22,961, and definitely above the low of the 12th of the May 2022, which was made at the level of 25,367. So this is the game changer. So let me change this. Let me change this color to blue. So I will move my line and my arrow here. This is the game-changing level. If we break above this level, then of course we might say the bigger correction is coming, the bigger pullback is coming on the bigger time frames, and we might even attack the level of $30,000. Okay, so this is the game changer, 25,000, and this is 25,337. Let me just 337. There you go. This is the level. All right. So this is how it looks like in the Monday morning. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.